सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this episode of Macrosutra. I'm TCA Sharad Raghavan, Deputy Editor at ThePrint. And today we're going to talk about the new fresh data that's out from the IMF. It's come out with its World Economic Outlook, the edition for October 2023. It's got data on growth for India, growth for the world, and in particular, the effect of this new Israel-Hamas war, and of course, the ongoing Ukraine and Russia war. And to dissect all of this, what the IMF has said, we have Radhika Pandey, Associate Professor at NIPFP. Thank you so much, Radhika, for joining us.
Thank you, Sharad.
So now, Radhika, what has the IMF said about India's growth? Are we still the fastest growing economy in the world? And next year as well, will we be the fastest growing economy?
Yes, so IMF has revised its growth projection for India as compared to the July update. So IMF comes up with its World Economic Outlook twice a year,
Right.
in April and in October. And in July, it came up with an update to its April assessment.
Right.
So from there, from the July update to sitting in October, the IMF's assessment has been that growth is projected to be higher than what it was estimated in July.
Growth in India.
Growth in India, yes.
Right.
So growth in India is now estimated at 6.3%,
Okay.
which is a 0.2 percentage jump from its July assessment. So
I
we
see.
spoke about the July update also. At that time, the IMF had projected India's growth at 6.1% for the current financial year. But now it projects the growth at 6.3%. And so we are inching closer to what the RBI's projections or the government's projections are for the current financial year, which is 6.5%. So 6.3, 6.5%. Even a couple of weeks back, the World Bank came up with its projection, and they also project India's growth at 6.3%. So that is the assessment about India's growth story, and it's mainly due to the strong consumption. So what is the reason that they have attributed to the 20 basis points upward revision in growth as compared to the July update? It's mainly due to stronger consumption. So in the first quarter numbers, we saw that consumption, the private final consumption growth was 6%, which was more than 2.8% in the Jan-March quarter. So that is the main reason for upping the growth projection for the current financial year for India.
And by consumption, you mean literally the things that we go out and buy?
Yeah. So it's the household consumption or the private final consumption expenditure. Now, there can be, debate about whether it's only driven by urban areas or rural areas. But on an aggregate basis, if we look at the CSO's estimates, and IMF is also basing its projections based on CSO's estimate, the statistical agencies' numbers, and there they have seen that the consumption posted a decent growth of 6%, and that has led them to upward revise India's growth projections for the current financial year by 20 basis points.
Right. And now this is the headline question. Are we the fastest growing in the world?
Absolutely. We are the fastest growing in the world.
Fantastic.
Yeah. So we are the fastest growing large economy. And if we see all the countries, we can talk about those. So amongst all those, we continue to remain fastest growing economy, not only in this year, but also next year. Because next year also the IMF projects economic growth at 6.3%.
Right. And now, as you said, that it's consumption-led growth that's happening, but are the policies of the government, the investments that it's been doing, are those paying off?
Yeah, that's definitely paying off. So that was the reason that we are 6% or 6.1%. This 0.2 percentage jump from July to October, that assessment is driven by stronger than expected consumption.
I see. So
Because-
to getting up to there was
Yeah.
because being fueled by government,
Yeah.
and then
Yes.
the 0.2% was because of consumption. I
Yes,
see.
because whatever their expectation of consumption might have been, when they saw the data, the CSO's estimates, they feel that consumption is stronger than what they had expected, and therefore they have revised upwards the growth projection for India. So, and it's very interesting. We see for many countries they have revised upwards. For many countries, particularly China,
Right.
they have revised it downwards, and we can talk about the reasons. So it's interesting to see how their assessment has changed from July to October, and there are different reasons for different countries.
Of course. And as you mentioned, that different countries have different outlooks. Overall, the developed countries are set to see slowing growth, right?
Absolutely. So, if we look at the global growth as a whole, from 2022 to 2023, global growth is projected to slow from 3.5 to 3%. And that is mainly due to the slowdown in advanced economies, where growth is projected at 1.5%. So,
Right.
emerging economies are still holding up. They are doing better, but in terms of which set of economies are driving the slowdown, it is mainly the advanced economies.
And is this going to impact us? Because a lot of these advanced economies are big trading partners of India.
Absolutely. It will impact through the export channel, because as we've talked about earlier also, we looked at our export composition also. The share of US and EU has increased over the last
Right.
couple of years from pre-pandemic to this time. So if these economies slow down, and even if China slows down, that will have an impact on economy, particularly from the export channel.
Right. And you've also mentioned from your article that within the developed world, there's quite a lot of difference in how different countries are doing.
Yeah.
Say the US versus Europe,
Correct.
for example.
Yes, yeah. So that's very interesting, because till now we were the expectation was that advanced economies as a whole, advanced economies are slowing down. But United States stands as an outlier. United States has been doing well, and therefore, as compared to July, their growth projection has also been revised upwards by 0.3%. So that's a big jump in a span of a couple of months from July to October. And so now the US growth rate is projected at 2.1%. There was a time a couple of months back when there was this expectation that US economy will enter into recession
Yes.
in the second half of the calendar year. But that is nowhere to be seen as of now, because the main reason for this is that despite the sustained interest rate hikes that we have seen, almost 5.5% rise in interest rate, consumption is still holding up, and the labor market there is still tight.
Right.
And why is consumption holding up? Because at the time of pandemic, a lot of fiscal transfers were given to people. People were given money. So they had savings, and during this time when interest rates were rising, they have actually used their savings to maintain their consumption.
I see.
So that has not led to a slowing down despite a persistent, sustained rise in interest rates. But going forward, there is again expectation that now people are running out of their savings, and therefore now the impact of interest rates will start showing up on the wages and on consumption, and therefore next year the US growth will also slow down. But as of now, US economy has shown sharp resilience, and that's also reflected in the FOMC. Last month end, the US Monetary Policy Committee
Right.
also met, and they have also sharply revised their growth projection up to 2.1%. And therefore they said that, still economy is strong, so there might be a scope for one more interest rate hike.
Oh, wow.
So because the economy is strong, so the sum total of all this assessment is that US economy has exhibited sharp resilience, and therefore despite the set of advanced economies slowing down, US is doing well.
They're projected to do well this year, but you mentioned that they might
Yeah.
slow next year. So
Yes.
what is the projection for
It's
next year?
1.5% for
Oh, back
next
down
year.
to 1.5.
Yes.
I
So,
see.
and that is because the IMF's assumption is that slowly these savings are running out for households, and
Right.
therefore now the impact of higher interest rate will start showing up, and there could be risk of default, because those who have taken loans, they won't be able to pay back. And if there are sustained interest rate hikes, then that will impact consumption. So interestingly, there's another report. So one is the World Economic Outlook. There is IMF has released another report on the same day, 2 days back, which is the Global Financial Stability Report, which talks about these issues in much greater detail, that next year growth will slow down because the impact of these interest rate hikes will start showing up on the households' balance sheets and as well as the companies' balance sheets.
I see. So about Europe?
About Europe, yes. So Europe, as compared to 2022, their growth is projected to decline from 3.3 to 0.7%.
That's a big drop.
Big drop. Even for UK, it is even a sharper drop. But again, within the EU, there is this lot of heterogeneity. Particularly, Germany is already in recession. It is the only G7 country which is in recession and is expected to remain in recession this year. So that is about the EU. But what is interesting about EU is that next year they expected to do better as compared to this year. And that is mainly because they are mostly done with their interest rate hikes. They are saying that they are, now the inflation has started to cool down, which is generally a good thing about across the board about all the economies. We have seen inflation has started to come down. So in EU, it has fallen much sharply as compared to other countries. So they are now signaling that they are done with interest rate hike. So going forward, growth will improve. So that is about EU. And UK growth has fallen from 4% to 0.5%. So that is a big sharp decline from 2022 to 2023. And the main reason is, again, there are two main reasons. One is the sustained interest rate hikes and the other is the energy price volatility. Because these economies are dependent on energy, and whenever there are shocks in form of energy price hike, that will have an impact on the growth prospects of these economies.
Right. And now you mentioned that inflation has been easing for a lot of these countries.
Yes.
But now what will this new war that we have, Israel-Hamas, what impact will that have on inflation? I mean, oil prices, of course, and through that on inflation.
Yes. So we can, these reports, the World Economic Outlook report and the Global Financial Stability report, came before the surprise attack by Hamas on Israel. So it's not capturing this fresh headwind or the fresh risk to inflation. And therefore, if we go by the inflation projections by these reports, they project that inflation will fall from 9% last year to 5.9% this year. And again, the pace of disinflation is much sharper for advanced economies as compared to emerging economies. So overall, that is the picture. But now coming to this fresh headwind, economies are already grappling with the pandemic related shocks and the Ukraine war. And now there is this fresh headwind. And this is concentrated in that area which is very prominent for oil. And if there is escalation of war in that region, it will create supply side shocks for oil, and that will have an impact on oil prices. Even before that, we have seen that in September, oil prices were rising because OPEC plus countries had announced a production cut, both Russia as well as Saudi Arabia.
And which they extended till December.
So that had resulted in the oil prices rising to $95 per barrel. It's only in October first week that they again moderated because of lower demand from China and good inventories. And again, they have skyrocketed after the surprise attack by Hamas on Israel. So there is a lot of volatility in oil prices. Right now, there is people are saying that it is still quite premature to talk about the exact impact in terms of magnitude.
It's still early.
Yeah, but if it continues over a longer spell, that will have an impact on oil prices. It will upend the inflation projections by the RBI and by the IMF for India and for the global economy as a whole. Because what's important is to see that, what is our assumption? Because RBI has assumed inflation for India at 5.4%. Now, this inflation projection is based on certain assumption. And one of the critical assumption is about oil prices. And the oil price assumption that they take is $85 per barrel.
Wow, it's already higher than that.
It's already higher than that. So
Yes.
if it continues to remain higher, that will have an impact on inflation, because according to RBI's own estimates, a 10% rise in oil prices leads to a 0.3% increase in inflation.
Inflation. I
So
see.
that is the relation between oil price and inflation. So that will make it more complicated for the central bank in India as well as in other countries to tame monetary policy, and this concept of soft landing that we've been talking about, that you raise interest rate but you don't impact the economic activity, you don't lead the economy into recession. That is again indulgent, that is again becoming challenging, because there might be requirement of further raising interest rates and interest rates remaining higher for longer, not only in India but in other countries. So that is the impact on inflation. But yes, there are impact on the rupee also, there's impact on the fiscal math, there's impact on the current account deficit.
So about the fiscal math actually is what I wanted to touch upon, especially since the elections are next year.
Yes.
With rising oil prices, now the government hasn't changed oil prices since about May, June of 2022.
Yes.
It's been absolutely unchanged. Not a paisa has been changed since then. But now with oil prices again rising, what would the impact of keeping it unchanged until the elections be on the government's finances?
Yeah, so it's going to be a complicated policy mix. So it depends on what is the policy response that the government takes, whether the government intervenes in the oil price market or not. If it intervenes, that means it will have to increase its expenditure on subsidies. That will disturb its fiscal math. Currently, fiscal math is doing quite well, because our tax revenues, which were showing signs of moderation in the first quarter, have again rebounded, and there are these assessments that direct taxes will surpass the budget estimates. So that is the good news. So but now comes the challenging phase, where the policy response of the government will determine whether the impact will be more on the inflation trajectory or on the fiscal math
side.
So if it allows the impact of higher international oil prices to percolate to domestic prices, then the CPI will rise, because WPI will rise anyways, wholesale price index will rise, because that is the international crude oil price. So its impact on domestic retail fuel prices will depend on government's policy intervention. Whether it passes on or whether it takes over the hit. If it takes over the hit, then it will lead to it could lead to deviation from the fiscal deficit target. Whereas if it doesn't take the hit, or it partially takes the hit, it will have an impact on inflation. So there are these complex policy choices. But on the other hand, our import will definitely increase, because the prices will rise. So import will increase, our current account deficit will increase, and most importantly, the rupee will come under depreciation pressure. Now, this is important because even for the inflation projection, the RBI makes certain assumptions about the exchange rate. And that exchange rate is 82.5 rupees per dollar. And we are already above that. And why we are above that is because in the US, the bond yields are very high, dollar is strengthening, so FPIs have been selling,
flowing there.
So risk of sentiment, and that will get further accentuated with oil prices imposing downward pressure. So this new development, if it escalates or if it protracts for a longer time, it will have fresh worries for inflation, for fiscal math, for current account deficit, for the rupee, depending upon the policy response of the government.
And now we have a question from Sankalp. He says that in the past, we've had 8% growth in India and in China, and this has been due to capital deepening. But now is this current, we're at around 6%, 6.5%, 6.3%. Is that a signal that India needs to shift to technology-driven growth? Or is it simply that the world itself is yet to return to any sort of higher growth level? And has the confusion around climate change, energy, and other geopolitical factors created global uncertainty over demand?
Yeah, I think it's the second part which is important, that all these challenges that Sankalp has mentioned, those have led to downward revision in growth, because for the world as a whole, and therefore for the Indian economy also, because we've seen from 2020 onwards, we have seen so many shocks in the form of pandemic, Ukraine war, and now this possible shock and its attendant consequences in the form of commodity price hikes,
Right.
supply chain bottlenecks, disruptions, and so on. So that has impacted the growth, and therefore now, even if an economy achieves 6 to 6.5% growth, it is considered to be good growth, because at this point in time, if we try to attain 8% growth, then it will create overheating or it will create more deficit.
Right.
It could be due to higher credit growth. It could be due to higher imports. That may not be sustainable. So,
Or maybe the government doubles its expenditure, which would then ruin its finances.
yes, so doubles its expenditure, then the deficit will rise, and ultimately such kind of expansionary growth, fiscal expansionary growth, monetary expansionary growth, we have seen our experiences during the 2008-9 crisis and then during the 2011 slowdown, that these kind of policies do not work. The kind of policies that work is what we saw during the pandemic, where, you have a conservative fiscal stand.
Right.
You focus on the targeted set of population. You have policies that do not result in a huge spike in non-performing assets and so on. Right. So I think given these kind of shocks that we are facing, 6 to 6.5% is a good growth, which the IMF's chief economist has also documented. He has also acknowledged that India is growing strong, consumption is strong. So that is the assessment.
Right. So there you go. What the IMF is saying, that India remains a bright spot in the global economy. We are the fastest growing, and we will be the fastest growing next year as well, with 6.3% growth. This was in fact even revised upwards for this year from 6.1 earlier, which is a great sign. But there are, of course, several headwinds in the world. One is that Europe overall is seeing slowing growth, and the world economy in general is slowing. And what the IMF has not been able to incorporate, because its report came out early, is this Israel-Hamas war and what impact that could have in the future on things like oil prices. And now India imports most of our oil requirement, actually the bulk of it, 80% or so. So the impact on us of higher oil prices is going to be felt. But for now, we're sitting on a pretty sweet spot. We're the fastest growing, and will remain so even next year. On that note, that's all from us. Thank you so much for watching.